Ladies and gentlemen, welcome back to the channel. AMC Stock currently up about 5.59%, doing about 5 times better than the Nasdaq and the Russell 2000. This is something that we are quite used to. On strong days in the markets with the broad indexes, AMC Stock tends to well outperform, and we might actually be looking at a mega bounce kind of scenario coming tomorrow. Mega bounces are 15 to 25% positive days, usually on a Thursday and a Friday, due to the options expiration. A little bit of a weekly gamma squeeze, but it tends to happen in one day, because after all, when a lot of options are expiring on a day like tomorrow, which we do have a lot of options expiring for AMC on a day like tomorrow, and you get really good news and options start to go in the money, there's no time left to expiration. All the hedging has to pretty much happen all at once. So we're going to talk about a mega bounce like situation that could play out tomorrow, why I actually think that's quite likely given Snapchat earnings, and especially this article that says Snap earnings preview. Snap stock likely to trade higher due to strong full year 2022 Q3 results, with revenues and earnings beating expectations. Now this looks like the base case for these people, but if you look up Snapchat earnings preview, basically across any news outlet, you're going to see a lot of positive things being said, kind of like Netflix, because Snapchat and Netflix are both two companies that have came out and basically lowered all expectations. Like, the expectation for Netflix and Snapchat are very, very low. That's why Netflix gained 2.4 million subscribers when we were only expecting a 1 million subscriber increase, right? They sandbagged on their last couple of earnings. And why Snapchat is actually so important for the broad markets is because it's seen as a bellwether for advertisement companies, right? If Snapchat has good earnings, then the markets look at that like, hey, other advertisers such as Facebook and Google, which are much larger companies, are going to have likely better earnings. And that is why Snapchat does move those companies around quite a bit when they do report earnings every single earnings season. And it does move the markets around a lot as well, because those larger companies, like I said, Google and Facebook, are much larger percentages of the broad indexes, guys. So we have a lot to talk about on that front, why this mega bounce could be on the way. We're going to talk about AMC, the short interest, the option activity, everything we're looking at, but really, why are we rallying here today? And the honest truth is a couple of things. So we have Liz Truss that is resigning after her failed budget and the market turmoil that the UK has caused. This is seen as a positive thing for global markets, because that was a lot of volatility. There was a lot of fear around what she was doing, if it was right or wrong. The markets obviously disagreed with her, and you almost seen pension funds go completely bankrupt in a very large amount over in the UK. They actually had to step in and start stimulating and supporting their market. So that is seen as a positive thing here today. But you're also seeing the dollar, which is falling as well today. UUP down about 0.32%. It's not going up and hitting a brand new high. And even yesterday, the dollar was up 0.73%. That's why you've seen a pretty brutal day in the equities market. And usually when you see the dollar down, you will see the stock market up as of right now, because as the dollar continues to go up, it is not a good sign, or really not good fundamentally for businesses based in America doing business overseas, taking in foreign currencies and converting that back to dollars. I sound like a broken record here, but that's why the dollar is so important, given we are at 20, 30, 40 year highs for the dollar. Everyone wants to own the dollar. When the dollar falls, that is a massively bullish thing. And once the dollar really falls, once the Fed does U-turn, the dollar falls, bond yields fall, that's when you are going to look at yourself and say, hey, I wish I bought the dip over the last 2 years. But as of right now, even small days where the dollar is down is giving us a 1% jump in the Nasdaq. And obviously you're also seeing this jump for other reasons. Tesla earnings were not great, but they weren't as bad as what they could have been. We're also coming off of Netflix earnings, which were very, very good, because they had sandbagged earnings in a big way over the last 2 earnings. And that's the same thing, like I said, Snapchat did. So if Snapchat sandbagged just like Netflix, it's gonna be no surprise when Snapchat does better than what they expect. Remember back Snapchat last quarter reported earnings, and about a month after they reported earnings, they said, yeah, guys, we're cutting our guidance. We expect to have zero free cash flow. It might actually be negative. Like, we're not expecting any positive things out of Snapchat, and the valuation's a lot better. Like I said, that'll feed into larger companies, and that could give us a market-wide boost for the markets. So before we get into the option activity over on the Ortex data, before we talk about AMC short interest, the days to cover, the cost to borrow, all of the important numbers that we like to cover here on this channel every single day, I want to fully explain to everyone what a mega bounce is, how it's similar and different to a full-on gamma squeeze. So a gamma squeeze, if you guys are unaware, it's essentially when the price of the stock goes up and it hits key levels and a lot of options go into the money, and the market makers, since they sold you those options, they have a contractual obligation to give you shares at that price, right? If market makers sold a $7 call, for an example, because that's the next key level where there's a lot of open interest, they sold those $7 calls, that means they have to give you shares at $7. That means the market makers, they're not going to lose money, so they have to go out and buy stock before $7 so they can give it to you at $7 so they can make a profit. That's how gamma squeezes work, and that's why really gamma squeezes can get completely out of control if there is a lot of options. Now, how a mega bounce works, it's essentially saying that the premiums, the price you're paying for options, the day, you know, the 1-2 days left until expiration, they get very cheap. So when a lot of people hold those options and a lot of people go out and buy those daily, weekly options for a large expiration, such as tomorrow, well, the break evens are a lot closer, meaning that if AMC stock went even, you know, close to $7, you're gonna have to see instant hedging. Whereas, let's say for the previous example, if you had bought a $7 call but you paid $100 for it, that means technically the market makers collected $100 on that trade. They wouldn't have to, you know, buy any AMC until $8 per share because they collected $100 from you. And they wouldn't lose money unless the stock went over $8. But if you bought that option for $15 and the market maker collected $15 from you, technically they would have to hedge that option by at least $7.15 per share if you want to get technical with this. But really, a mega bounce is a one-day event. It's a major move up in the stock on a Thursday or a Friday. I don't know if I've made up this term for AMC. I've never heard anyone else talk about this, but it has happened a couple times in the past. And it looks like it's really setting up again if Snapchat does have good earnings or even decent earnings, and the price of the stock can go up and send the NASDAQ up, send shorts really running for cover. Now, as far as the actual numbers for tomorrow's expiration for October 21st, you have 11,188 calls that are currently in the money, 215,501 calls that are out of the money. And if we look more specifically at what strikes they are at, you will see that for tomorrow at the 650 strike, you see 12,574 for open interest, but you're seeing about 10,000 for volume on the day. That, and the contracts are only $18. So technically the break even on this is $6.78 is where market makers would have to go out and buy stock. And if the volume is correct and that's added to the open interest or even half that amount, that's a lot of shares that would have to be purchased by the market makers. Same thing for the $7 strike. You have 19,000 for open interest and 10,000 for volume. These contracts are only $5. So if AMC stock went to $7.05, market makers would have to hedge out a massive amount of options. But then for next week, you don't have a lot of open interest or really a lot of volume for these options. So that's why it's usually a 1 to 2 day event on Thursday and Friday when people do pile into those weekly options and force the market makers to hedge out their positions in a very quick and fast manner. And that's why you can get those 15 to 25% positive days on a Thursday or a Friday. I like to call that a mega bounce, and that is what it is looking like if Snapchat has good earnings, if we do send the shorts running for cover, and you do get a risk on sentiment in the marketplace, because Snapchat, it's not a cheap stock. It's cheaper, a lot cheaper than it used to be, but it is implied to have a very high growth rate. So if Snapchat can deliver on that, well, that's going to send a lot of growth stocks essentially flying coming tomorrow. And I think there's a better likelihood than not that Snapchat will actually do very, very well. And Snapchat's a 20-30% mover typically on earnings. So that will definitely affect Facebook, Google, a lot of your advertiser-based stocks. Now, as far as the Ortix data on AMC and the actual short interest of free float, sitting at 19.22%, the free float out on loan at 36.16%, shares out on loan 186.35 million, days to cover almost at 5 days to cover. That's because the volume has been so low, and that's going to work against the shorts if they do try to get out of those short positions, or if you do see a gamma squeeze, a mega bounce, whatever you want to call it, it's going to be pretty hard to get their hands on actual shares. Cost to borrow sitting at 19.53%. If we look at the live short interest, the cost to borrow max is still staying relatively unchanged at about 24.5%. Cost to borrow max at 21.53%. And these numbers are very, very high, with a cost to borrow minimum at 19.04%. These are numbers that typically you don't see all too often. Now, as far as the option activity for the day, you're seeing 10 orders totaling $642,000 with a positive order value of 0%. So it could be a lot better as far as options are concerned. But really, we know the story here, right? They'll push down the stock and do whatever they have to do to push it down. And really, it's going to come down to Snapchat earnings. It's going to come down to if people continue to hold on to these options throughout the rest of this week, guys. So that is going to be all for this video. Hopefully, you guys caught the drift of this video. It's setting up, in my opinion, to be a pretty bullish situation overall, but nonetheless, I'm not a fortune teller, I'm not a wizard, I don't know exactly what is going to happen, so always come to your own conclusions, do your own due diligence, your own research, because you're investing your own money at the end of the day. But in the meantime, hit that like button because it's free 99. Subscribe to the channel because, hey, you want to stay up to date with this information that is going to make you money. And if you guys want to take that extra step and come trade with me live in real time, get access to all of my trades as soon as I make them, simply a tool you can use to get a different perspective of what someone else that has been doing this for a very long time is doing with their money. Not always going to be 10x's, not always going to be 1,000%ers or 5,000%ers, but we tend to do pretty well over there. So that is going to be all for this video. Thank you for watching, and I will see you in the next one.